Hello everyone and welcome to today's morning report on Monday the 10th of October with me, which is Pro Market Analyst at Tech Markets. European trading sessions got off to a mildly negative start. There's nothing too significant in terms of direction today. We've got the US on holiday for Columbus Day, and also just generally speaking, just markets are a touch sort of on the quiet side, just trying to settle down still from pretty hectic end to the last week, obviously with the flash crash on sterling and also non-farm payrolls as well. But what we have seen is a mildly sort of, it started off actually sort of slightly positive on FTSE, but then fell away again. You've got FTSE which continues to outperform on the underperformance of sterling. Sterling continues to remain very weak in the wake of that flash crash last week. I'll show you the sterling charts in my analysis in a bit, but we're certainly seeing that continuing today. We're also seeing the dollar strength, which had unwound slightly on the back of the non-farm payrolls report on Friday. That has started to sort of rally slightly today again. We had the second presidential debate last night between Donald Trump and Hillary Clinton. No real overall winner came out of that debate, but I think probably the big takeaway from that was the fact that Donald Trump didn't regain any lost ground that he had after the publishing of that video that came out over the weekend, that seems to have damaged him personally once again. But no real recovery in his poll ratings on the back of the presidential debate, and certainly the markets would take that as a positive. That would be positive for equities, positive for the dollar, and positive for risk appetite generally. That's generally where we're sitting today. But again, as I said, you've got Columbus Day for the States, so nothing too significant in terms of direction. But we've seen Treasury yields which have settled a bit. Again, that's helped by the presidential debate, but generally speaking, the dollar has just rebounded a touch today across the forex markets, and that seems to be the case. Now, we have also had a bit of a correction in the oil price on Friday after that payrolls report, and there have been suggestions out over the weekend that sort of the non-OPEC players are not going to be partaking in an oil production cut. I mean, that's not really to be expected in this world of fight for market share, but still the oil price has come off slightly today on the back of that. But generally speaking, marginally risk neutral to sort of on the equity market slightly lower. So join me again for my second look at second week at the FX Trader of the Year instruments, and my analysis will begin shortly.